This metal has been a symbol of wealth, but knowing when and how to sell your gold can make a significant difference in your financial outcome. Hello everyone and welcome back to another video by MacDonald Bullion. Today's video we're going to be discussing how's the best and where should you sell your gold when the time is right. Now, as a UK investor, navigating the world of gold investment can both be exciting and daunting. And whilst gold often acts as a safe haven during turbulent economic times, the decision to sell and exit this investment requires really careful consideration. And whether you're selling physical gold like gold sovereigns, gold Britannias, gold ETFs, or perhaps even shares in mining companies, understanding the right strategies can help you make informed decisions. Now, many investors find themselves in a dilemma when the time comes to sell their gold. Questions that often arise are, is it the right time to sell? What are the tax implications when you do decide to sell? Are you making a hasty decision on market fluctuations? And without a proper exit strategy, you may risk selling your investment at a low point and failing to capitalize on favorable market conditions. So to successfully exit your gold investment when the time is right, you must first conduct thorough research and monitor the market trends as well, the geopolitical factors and economic indicators that influence the gold price. It's also essential to assess your personal financial goals and circumstances. For example, if you invested in gold as a hedge against inflation and selling during a period of rising inflation, it might not be a wise decision. The different selling avenues for gold as well is crucial. So, for example, physical gold, you can consider reputable dealers, online platforms, or even auctions. So things that I would suggest are for bullion dealers: Chards, Atkinson's, Cardiff Gold, Tavex Bullion. These are just a few reputable bullion dealers that you can easily sell gold to them. So if you've got gold sovereigns, gold Britannias, these are bullion dealers that will give you a fair price on the gold that you're selling. Now, the choice of method can affect your selling price and convenience. Tax implications such as capital gains tax on profits over the £3,000 annual allowance that you're given is also a very significant factor as well. So knowing the regulations and possible exemptions can save you a substantial amount of tax if you're buying a large amount of gold. Now, gold, I would recommend if you are looking at purchasing. I'm not a financial advisor, but I've been buying gold for some time. Sovereigns and Britannias are going to be in my view, the way to go. These are capital gains tax exempt, so the profits that you make on this type of gold coin, because it's legal tender, you don't need to pay capital gains tax, unlike gold bars, for example. And that threshold, that £3,000 threshold, is very low when it comes to gold, and this being like near a £600 coin now. You really have to be careful with what you're buying and your exit strategy as well. Now, the key moment to exit your gold investment often aligns with achieving your financial target or observing a signal that indicates a peak market condition, for example. Now, for instance, you might decide to sell when gold prices hit historical highs or when your personal financial situation changes. It's important to act on your prepared strategy rather than succumbing to emotional decisions driven by market volatility. Now, we've seen Trump's tariffs, and it doesn't really affect bullion as far as I'm aware. The price has gone down since that announcement. There was a spike and now it's down, but that's just typical with gold and silver. This is ultimately influenced by supply and demand. If more people are selling, the price is going to go down. But in my view, when it comes to precious metals, it's an insurance policy for your money, and gold is really a really good safe haven asset to protect from inflation, which is unfortunately eating away at currency. So if you've got £1,000 in cash over the course of a year, that purchasing power will change. And the best way I can say how to portray that is the cost of things like goods and services. We know it goes up, and that's implications of things like inflation. Gold is a really good way to combat that and to preserve your wealth as well. Why suffer over the long course of people deciding to print more money and make you poorer? It's really a wise decision to get into gold. I'll say that to anyone, no matter if you go for a gram or a large bar or even sovereigns. It's a really wise investment in my view. So exiting your gold investment the right way can significantly impact your financial portfolio by conducting really thorough research, understanding the market trends, and considering tax implications, the capital gains tax that I spoke about, and having a very solid exit strategy. You can maximize your returns whilst minimizing risks, and really that goes across the whole board on whatever it is you're investing in. But gold, if you understand the market, if you are in this for the long haul, I really wouldn't worry about the market volatility with it. It's a really good investment, a really wise investment in terms of my view, but it's not a financial advice. Really important to mention that. I'm not giving you any advice, but take the historic trends, which I know is not a fact for future results. It gives you a bit of guidelines on how well gold can do compared to inflation. Thank you so much for watching. I'll see you in the very next video.